This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are primed to shrug off the rally in their US peers. Treasury is partly reversing selling pressure from earlier this week. Japan gears up for the general election this weekend as a ruling coalition is in danger of losing its majority for the first time since 2009. And Australian Treasurer Jim Chalmers tells Bloomberg that the economy is on track for a soft landing.
Yeah, in fact, we have good news for the world economy as well, because we heard from G20 finance ministers and central bankers expecting a soft landing, Haidi, talking about how global outlook has remained resilient. But, of course, at the same time, we're really watching out for risks, right? We have ongoing wars, economic fragmentation, and all of these policymakers gathering in D.C. right now, really focusing on the U.S. elections as well.
And so many risks, particularly when it comes to pertaining to how effective the stimulus measures from China will be, not to mention ongoing geopolitical tensions, including what we're watching in the Middle East. Take a listen to what we heard.
The U.S. economy is one of the strongest among the major economies, if you look at those. And when we compare the U.S. to the other G20 economies, it's the only economy whose GDP is higher now than we had projected before the pandemic. The only major economy. So it's a very strong economy, a lot of confidence in it.
And we're seeing some of that confidence and resilience on the economy in the U.S., right? We had data overnight as well showing really those business activity numbers remain solid. Jobless claims fell. We've been watching, of course, what's happening with where the Fed goes from here. And that's really affected where the markets go as well. We're seeing U.S. futures at the moment not doing much, but overnight on Wall Street, we saw those gains for the first time on the S&P 500 this week, especially led by the Magnificent Seven, which is now at the highest level in about 3 months, led by Tesla, the best day for Tesla in 11 years, given its solid results. And all of this really pointing to where the tech sector goes from here. But despite the fact that we've seen some losses in U.S. markets this week, we really have to look at the bullishness overall, right? We are talking about the S&P 500 remaining above its 200-day moving average. We had Treasury yields falling, the dollar falling on the other side of the trade. Take a look at what's happening in Asian markets, especially with the Japanese yen, which rose overnight. Despite the fact that we saw a little bit of strength for the Japanese currency, we're still talking about levels that we haven't seen in about 2 months or so. So a lot of talk about intervention, a lot of talk about where the BOJ goes from here. We heard from Governor Waseda overnight also speaking on the sidelines, of course, of all of those meetings in D.C., really not signaling any moves to come next week, but the speculation on where the yen goes from here at 151 right now, that it could potentially touch 160, Haidi, is a perspective from the likes of Mizuho Securities, also Bank of America.
And the view from our next guest, Shery, is certainly that there is further upside quite easily over 155. Let's bring in Hebe Chen, who's a market analyst at IG. There is still a great deal of uncertainty when it comes to what the political outcome is going into next week, not to mention the implications for the Bank of Japan.
Yes, exactly. I think I do suspect that moving forward the next 2 weeks will be a very volatile time for the Japanese yen, and of course translate into the pair for USD versus JPY. As you mentioned about that, the political issues, the political uncertainties will be the first hit to that, and then we know that, as you just introduced, that this Sunday we're going to have the Japan's election, and it's looking likely that it's increasingly chance that we're leading party or the current Prime Minister probably could not get a clear victory. And we know that back into the September 27, when he really surprisingly win that Japanese yen jumping up 1.8% on the day, because he's been well known as a hawkish supporter for a stronger yen. But if the leading party could not get a clear victory this weekend, the chances are the market will get two perspectives. One is that whether or not they can stick into their hawkish economy strategy, and second is the political instability. And that political instability is often not the reason that people will buy in to the currency, to the yen. And that's why that I'm thinking that maybe 155, which is a level just right before the Bank of Japan raising the rate back in July, that level could potentially back in build after this Sunday.
Certainly the Bank of Japan, Governor Waseda is not in a rush, right? He's saying that, he has time on his side, essentially. That coupled with the political situation, how much pressure do you think they can withstand when it comes to the currency?
Yes, exactly. I think Haidi make a good point. I think that they have been very cautious since last year, that we always having a back and forth, always have a guess scamming about what they will keep hiking and where's the next hike will come. I think that, as I mentioned, the political instabilities, the uncertain outlook about the economy, given that we probably potentially seeing a new joint parties or joint hands to leading the Japan economy. I think all this big pack of uncertainty will certainly making the Bank of Japan actually cautious. We know they've been very cautious already. So I think I'm not quite certain whether or not they'll keep hiking in 2024. And moving forward to 2025, I think the new year will continue to introduce more uncertainty to keep the Bank of Japan cautious about their next step.
And the political landscape in the U.S. also pretty uncertain, right? And depending on what happens to the U.S. election, what's the trajectory of the U.S. dollar? And of course, I guess on the other side of that trade, the yen as well.
Yes, indeed. I think for the next after the Japan's election, the next week we're having the PCE. Next week we're having the Bank of Japan's meeting, and the week after we have the Fed, and of course the U.S. election. I think all these factors is now likely, on the one hand, will potentially giving a bit of a stronger boost for the USD, for the uncertainty, for the shelter for the uncertainty. But also on the other hand, is that whether or not the inflation data coming out next week will keep feeding into the perspective that the Fed is now not in a rush to cut. I think September probably give everyone a bit of a hope. Maybe it's a false hope at this point of time that they will keep hawkish, keep aggressively cutting. But maybe I think it's time to checking the reality whether or not that we are expecting that they cutting aggressively as September is a realistic thinking and perspective.
What does that mean for the incredible rally that we continue to see in the Magnificent Seven?
Yeah, next week also bring us a busy calendar for the big tech company. We're having 5 out of Magnificent 7 will report the earnings next week. Alphabet, Amazon, Apple, and Meta, and Microsoft. And the one of interesting point is that if you're looking for their share price performance, actually only 1 out of these 5 has outperformed SP500 for the past 6 months. Only 2 outperformed them. Only one outperformed them in the year to date, and 2 outperformed in the past 6 months. So I think the market is getting lose a little bit interest and confidence in terms of the AI rush and AI frenzy. And for that particular point, I think that would be an interesting to looking into the opportunities, whether that we can get to the point the share prices probably misaligned with their business performance. And next week will be a golden opportunity to checking whether or not this misalignment is justified. And it's probably a good timing to checking that whether or not that we could potentially back in review to looking at the Magnificent 7 as the next leg for the US stock rally.
We've seen that global fund rotation going back into China now at the expense of some of these other markets like Korea, like India. How much conviction do you hold when it comes to a sustained recovery in that equity market, given that we're still waiting on the fiscal side and a lot of details from policymakers?
Yeah, I think that we get into the point that we probably have to taking different lens into looking into Chinese stock versus Chinese economy. I know I'm always been quite skeptical about that, whether or not the China's economy safe plan could really save the economy and putting it back on track. But what I could and positive now is the stock saving plan is actually coming to a very good result. If you're looking for the Hang Seng, for instance, the Hang Seng has getting 20% year-to-date gains, while versus the other markets like Japan's, the SP500, they're actually doing pretty well in terms of we're looking for the data-wise. And looking for the Hang Seng history, if they even not change until the end of this year, they've still been the best year since 2017. So that could have a profound impact because the boost of the stock market will help the investor to help the capital stay in the country, stay in the market. That potentially will fit back into the economy. I think that's another plan that Chinese economy top policymaker trying to do. And that perspective, I'm pretty positive for that. But whether or not they could translate a material change for the economy, I think that's another story.
Hebe, what does this mean for potential safe haven assets or even risk assets like gold, Bitcoin, cryptocurrencies?
Well, I think that based on this week, I think the market is taking a little bit of COVID ahead of the US election. But if we're looking fundamentally, I think the drivers for both of them, gold and Bitcoin, they will stay after all this dust settled from the US election. The fundamental driver, which I mean, is, as you mentioned, the safe haven demand for the for the gold, the perception that US dollar will getting weaker next year, and the Bitcoin wise, I'm looking into the supply and the demand side. And one reference probably is that when I'm looking into the Bitcoin share prices, the prices after the halving just happening exactly 6 months ago, and the Bitcoin price is only jumping up at 7% now. But if you're looking back to the past 3 times of halving, the Bitcoin price is on average jumping about 50%. So from that perspective of comparison, I think that it's probably fair to say that the change of the supply and demand for the Bitcoin is yet to be fully priced into today's price. And that's why saying that when all this dust from the US election, for the Fed meetings after that, when all this dust settle, that probably will coming back to see the fundamental, and that will be the next leg for the Bitcoin prices, for the gold prices, for moving ahead into towards the end of the year or even next year.
Hebe Chen, who's a market analyst at IG, always great to have you with us. So one stock that we are watching at the moment, seeing a significant move, is WiseTech. Shares are jumping 22% after the CEO, Richard White, stepped down from that role, shifting to a new role, stepping down, of course, amid these allegations of inappropriate relationships with several women. He now takes on a consulting role focused on product and business development on a 10-year contract. His salary, though, annually of $1 million Australian dollars is unchanged. We know that WiseTech's board has hired law firms to investigate these allegations, which have been widely reported in local media over the past few weeks. That search for a permanent CEO replacement will begin soon. So we are seeing really that positive reaction from WiseTech shares up 22%, with Andrew Cartledge, who's the CFO, becoming the interim CEO effective immediately. We know, Shery, that more than $5 billion of market value has been wiped from WiseTech just this week before that sudden stepping down of Richard White as CEO. So, you know, as this sort of ever-worsting media storm came to some sort of a peak, we have now seen him stepping down and WiseTech shares reacting very positively after these allegations that millions of dollars had been paid to a former partner to settle allegations of inappropriate behaviour.
Yeah, we'll continue to watch the stock throughout the session. But take a look, Haidi, at how the Japanese yen is trading. Of course, we saw a little bit of strength overnight, but we continue to see that move towards that 152 level right now against the U.S. dollar. We're hearing from Japan's currency chief, Atsushi Mimura, now speaking in Washington, saying that he's watching the FX moves, including speculative moves. He's watching these moves with a high sense of urgency, a phrase very commonly used among Japanese authorities, that it's desirable for the currency to reflect fundamentals. So a little bit more of a warning and caution coming from Japanese authorities as we continue to see these weakening trends on the Japanese yen against the dollar. Coming up on the Asia trade, DBS Bank Hong Kong joins us to discuss their outlook for the yen and why they think it's not a good time for an intervention. Port Shelter Investment Management gives us their take on the risks driven by the U.S. election. And we also look ahead to Japan's election with Mieko Nakabayashi, a former member of the House of Representatives. This is Bloomberg. Voters in Japan head for the ballot box this Sunday. Polls show the ruling coalition led by Prime Minister Shigeru Ishiba may fail to win a majority for the first time since 2009. Japan economy and government reporter Alistair Gale joins us now here in Tokyo. And Alistair, I mean, it's very difficult to get some visibility of what happens on Sunday.
That's right. I mean, this is likely to be a long election this time around. Things are very close. The surveys show that it's going to be very tight. The ruling coalition, the LDP, and Komeito may or may not hold on to their majority. And if they do not, then it gets very interesting, because if for the LDP to stay in power, it's going to need help from elsewhere, which means it will have to talk to perhaps smaller parties or independent lawmakers to join the government. So this is going to be a very close race.
You've been around Japan in rural areas as well, talking to people. What's the sentiment there?
Right. So, we decided that we should go to some of the LDP strongholds in the country to see how people feel, because these are the places that the LDP needs people to turn out, vote for the current government, for the LDP to stay in power. And what we found was that some of this anger that sort of, we've been writing about, which has been directed towards the LDP because of this scandal over slush funds, is very real even in the areas where the LDP has strong support. So we went down to Yamaguchi, which is in the southwest of the country. It's a fishing area. The LDP candidates there normally, come back into return to their seats easily in elections. But this time around, it's going to be a lot closer. And what we found was that people were saying that they were unhappy down there with what the LDP has been doing. There's going to be some element of protest vote. And in the Japanese system, that could mean that you have proportional representation votes which are going for opposition parties. It could mean some of those, safe seats are lost by the LDP.
Who do they vote for? I mean, it's not like there's a meaningful opposition in Japan.
Well, increasingly there is. I mean, the opposition was last in power in 2009 to 2012. It has an image of not doing very well when it was in government, but that's over a decade ago. So the message now from the main Constitutional Democratic Party is they've changed, they are ready for government. And we found that with younger voters in particular, that message is coming through. And so this idea that the LDP is the natural party of government perhaps is not quite as strong as it used to be.
Lester, what are the implications? Obviously, we're watching the yen very keenly, but what are the broader implications when it comes to, whether it might hasten or not mean very much for the Bank of Japan?
Well, if the LDP does badly in this election, of course, that's going to weaken the government. It's going to weaken Prime Minister Ishiba. It may embolden people within the LDP who have strong views on the Bank of Japan, such as Sanae Takaichi, who was the runner-up in this leadership election for the LDP. She may feel that now is the time for her to make another push. So you may see voices within the LDP wanting the government to act more strongly or speak more strongly about the Bank of Japan. We may see push for more fiscal spending as well. If it's a weakened government, they need to bring in parties that may want to do things like lower taxes, have a bigger budget, spend more on the regions. So there could be, a strong economic impact if it's a close election.
Japan economy, government and Asia security reporter Alistair Gale there. You can also turn to your Bloomberg for more on this. TLIV Go. You can get that commentary and analysis from Bloomberg's expert editors. Well, China is said to be pressuring its automakers to pause expansion in the EU due to the escalating trade conflict over EVs. Our executive editor for the Greater China region, John Liu, joins us now. And John, we know that this is, such a key pillar when it comes to the economic recovery blueprint for Beijing. So what do we know?
Well, what we know is that the government in Beijing has put pressure on Chinese automakers who have plans to expand in Europe or are looking at sites to build factories to put some of that on pause while the negotiations are still ongoing. Obviously, the EU voted earlier this month to place tariffs on Chinese electric vehicle imports into the European Union, some as high as 45%. Beijing's been trying to negotiate with them on the level of those tariffs. Earlier in October, Beijing actually said they don't want the EU talking to individual Chinese car makers. And as we understand it, now seems like Beijing is telling those car makers themselves that they should cool their expansion plans while this negotiations is underway.
Yeah, where are we in the state of negotiations right now, especially as we face also, of course, increased uncertainty coming from the U.S. elections happening November 5th?
I would say we seem to be in a bit of a conundrum. China denies allegations that the European Union has levied that subsidies from the state are what has helped grow the electric vehicle industry in China so quickly, into such a behemoth that we see today. And instead, China has threatened to put tariffs, retaliatory tariffs on things like pork, on alcohol imports from the EU and other products. And so right now, it looks like both sides are trying to strengthen their positioning power, their bargaining position, and there's less discussion between the two parties on what they can give each other to make a deal work.
Our executive editor for the Greater China region, John Liu there. And some of the other stories that we're following this hour, the Biden administration has issued its first approval for a lithium mine, ramping up efforts to shift the US critical mineral supply chain away from China. Australian mining company Ioneer expects to start construction at its project in Nevada in 2025, targeting first production in 2028. China has long dominated global output of commodities crucial to electric vehicles. TSMC says it's achieved early production yields at its first plant in Arizona that surpassed similar factories in Taiwan. The company says the share of usable chips manufactured at the facility in Phoenix is about 4 percentage points higher than comparable facilities in Taiwan. The accomplishment is a sign of progress for Washington's efforts to revitalize America's chip manufacturing. More ahead on the Asia trade. This is Bloomberg.
Welcome back. Here are some of the geopolitical stories that we're following. Bloomberg has learned Russia is proposing a unified depository and clearance system for BRICS countries in a bid to sidestep the West. A source says Russia presented the so-called BRICS Clear umbrella at the Kazan summit as a way to ensure cross-border transactions, bypassing Euroclear and Clearstream. Russia has a clear interest developing such alternatives to get around U.S. and G7 sanctions since its invasion of Ukraine. President Vladimir Putin says military relations with Pyongyang are what he called our business, as he avoided answering whether North Korean troops are in Russia. Speaking at a news conference at the end of the BRICS summit, Putin pointed to the strategic partnership signed with North Korea in June when asked about troop movements. The accord states both countries will provide military and other assistance if either is attacked. Turkish airstrikes hit 47 targets in northern Iraq and Syria in retaliation of a deadly attack in Ankara. Turkey has blamed the militant group Kurdistan Workers' Party, also known as PKK, for the attack on its capital. Turkey's retaliatory strikes targeted dozens of Syrian positions held by the Kurdish YPG, which Turkey says is a PKK affiliate. Sources say strikes will likely continue in the near future.
Shery, we're taking a look at oil at the moment as we see some declines there. Some of these oversupply signals outweighing the continued Middle East war risk. Prices really dropping due to these concerns, and that gap between the nearest contracts for WTI really narrowing, suggesting an amply supplied market there. There's a demand concern there, of course, about a bearish outlook for 2025, and much of that is driving declines. This is Bloomberg.
We have CPI numbers out of Tokyo right now. We are getting the headline inflation number for the capital. Year-on-year growth of 1.8% for the month of October, which is a slowdown from more than 2% acceleration in the previous month. Of course, what we're watching closely is the core CPI number, exclude fresh food for Tokyo, and we're getting acceleration of 1.8% for the month of October. Also a slowdown. Core CPI year-on-year growth of 1.8%, a little bit of acceleration if you exclude energy as well from the previous month. It's very interesting that we're watching these numbers because they really are an indicator for nationwide numbers. And we already had some temporary factors really pressuring inflation pressures here in Japan. We have seen the halving of government subsidies for gas and electricity last September, so that raised the base figure. So that might be one reason why we're seeing a little bit of a slowdown when it comes to inflation numbers in Tokyo of course, we are awaiting nationwide figures as well. All to do with where the BOJ goes from here, where the Japanese yen goes from here, on expectations of potentially more tightening coming from the central bank. Our next guest is wary of intervention risks as the pace of the weakening in the Japanese yen has been excessive. Joining us now is Carie Lee, global market strategist at DBS Bank Hong Kong. Carie, great to have you with us as we head towards a BOJ policy decision next week. Governor Waseda signaling no change when it comes to the next week policy decision. What do you expect in terms of authorities signaling some action given the weakness of the yen against the dollar right now?
Hi, good morning. Thanks for having me today. For next week's BOJ meeting, we expect there will be no change to the policy in terms of the interest rate as well. But given that there has been outsized and excessive downward move in terms of the yen, it's possible for the BOJ to hint that they are still going to hike interest rates if they're going to have this elevated inflation going forward.
Where do you see the yen going from here? I've heard 160 coming from Mizuho Securities, Bank of America as well.
Okay, for the yen itself, actually we have seen the dollar yen coming off and now down below 152, probably because of the profit-taking flows ahead of this month end, and also possibly because of the verbal intervention from Japan's finance minister. However, the risk is still more tilted to the upside for the dollar yen at this juncture because of two reasons. The first one is the widening yield differential between U.S. and Japan, because now the market is pricing out Fed interest rate cuts while also pricing out BOJ imminent rate hike. The second reason is the absence of intervention from Japan. Probably now is still not a best timing for intervention. So for the dollar yen itself, we think the next target could be 153.4 before 155.
And part of that is that there is still so much residual risk as we get towards the US election, right? What are you watching out for in terms of what the risks are for, the continued big moves in both treasuries and also the dollar?
Well, for the election itself now is still too close to call, but market somehow speculates on a Trump victory together with clean sweep, which means that there could be aggressive tariff hike. So the market is really concerned about inflation ahead. Then apart from that, no matter who wins the election, actually the market is expecting a large fiscal deficit, a higher public debts, which means that there could also be more supply of the U.S. Treasuries. So we have seen this upward move in terms of the U.S. Treasury yields actually supporting the dollar index. And ahead of the U.S. election, we think there could be a lot of volatility in this FX market, and also the elevated U.S. Treasury yields as well as the Trump trade may probably have the dollar index supported as well.
What are the implications for the Chinese yuan, given really a multitude of those risks from the MPC Standing Committee meeting, but also what happens as the US heads to the vote?
Well, for the renminbi, actually, at this moment, we think it's more driven by the U.S. dollar factor because people are still waiting for the end of this month before China will really announce more stimulus details. Before that, it's more about the U.S. election risk. Also, in terms of the Fed interest rate cut trajectory, we'll watch out for next Friday's non-farm payroll as well. At this juncture, if we are having this elevated U.S. dollar index, probably the dollar CNH itself will also face some certain upside risk, probably towards 7.15. But after that, after the election, actually we are still expecting the dollar index to trend lower because we still expect the Fed to further cut interest rates no matter who wins the election. And also we are still looking forward to have more stimulus details from China in late October and probably even more in next March during the MPC annual meeting.
Yeah, because all of the measures that we've seen coming from Chinese authorities, whether it's the finance minister or the PBOC, we have seen that confidence back in the stock markets, at least in China, right? So how big of a risk is the U.S. election? Could it derail what Chinese policymakers have tried to do in supporting the equity markets?
Well, now actually we are still waiting for the outcome of the U.S. election. If it will be a Trump victory together with the clean sweep, which means that there will be aggressive tariff hikes on China's goods, which means that for China now, exports as a very main contributor to the growth probably is going to have slow down. Then the focus of China may have to shift back to local demand, local consumption. And in that case, probably we could expect more similar measures targeting consumption going ahead.
Carie Lee, Global Market Strategist at DBS Bank, Hong Kong. We'll take a look at what we're watching when it comes to Australian assets. We are just under 40 minutes into the start of trading here, as we have seen really these stocks still sort of coming off those recent record highs. We've seen some of that weakness, of course, when it comes to miners, and but we are seeing that upside as we head into the end of the week of about 0.25%. In particularly watching some of the metals-related stock names, palladium, titanium stocks could be on watch there. We also saw that big jump when it comes to WiseTech, that rebound after the CEO Richard White stepped aside. That stock was up by about 22% at one point with that personnel change, and a bit of a welcome relief after, of course, what has really been weeks of speculation and reporting in recent media. We also had heard from the Australian Treasurer Jim Chalmers talking about the economy on track for what he sees as a soft landing. He was speaking with Bloomberg's Sonali Barsak and says policymakers have been able to rein in inflation without significantly impacting domestic activity.
We've made really quite extraordinary progress in the fight against inflation. When we came to office a little over 2 years ago, inflation had a 6 in front of it. Now it has a 3 in front of it. And next week we'll learn more about the situation as it relates to inflation in Australia. But we've made a lot of progress. That progress has been welcome. It has been encouraging. And a big part of our success has been the responsible way that we've gone about managing our budget. The two surpluses that we've just delivered are the first back-to-back surpluses for almost 2 decades in Australia, and they are a consequence, a welcome, deliberate consequence of the spending restraint that we have shown, the savings that we have found in the budget, so that we can rebuild our fiscal buffers as the IMF has been recommending all of us to do in the face of these uncertain global conditions.
Jim, I'm glad you also brought up the inflation story here because, of course, all eyes will be on that third quarter CPI report next week. And you were saying, yes, inflation has come down, but it hasn't come down as much as other countries. And do you accept that perhaps rates need to stay higher for longer in Australia in order to bring down that last mile of inflation?
Oh, well, first of all, there's an important convention in Australia that politicians don't make predictions or don't give free advice to our independent Reserve Bank. That's an important convention that I adhere to. But when it comes to the inflation story in Australia, again, we've made really quite outstanding progress in the fight against inflation. And any differences between our inflation rate and what we're seeing in some other countries are a consequence really of two things. First of all, inflation in Australia peaked lower and later than most countries that we compare ourselves with. That's a really important point. And secondly, some countries that have lower headline inflation than Australia have got much higher unemployment, or they've got weaker growth, or some other combination of undesirable aspects of the economy. And so what we've done in Australia is we've focused primarily on the fight against inflation, but we've done that without ignoring the risks to growth. We've struck a really effective balance between those primary economic objectives, and that's because we've taken the view that it is much better to avoid a hard landing in our economy than to clean up after one. We are on track for a soft landing in our economy. We're confident but not complacent about that. And the policy decisions that we've taken, whether it's the 2 budget surpluses, the way we've delivered our cost of living relief, the way that we're investing in productivity and dynamism in our economy, all of these things are really important ways that we're getting that inflation rate down without ignoring the risks to growth which are coming at us from an uncertain global environment and from some domestic sources as well.
Australian Treasurer Jim Chalmers speaking with our colleague Shonali Basak. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching. We're just about 45 minutes into the start of trading here in Australia. A little bit of upside, about 0.25% there, really following the gains that we saw in the US session with stocks and bonds resuming the climb on the sort of expectation of Goldilocks data as well. We saw a little bit of more of a disparate picture when it comes to the rest of Asia, though, because Nikkei futures are looking a little bit negative at the moment. Hong Kong futures are also not looking quite so rosy, and we expect to see potentially a bit of slippage when it comes to Greater China as well, with the US-listed Chinese shares index falling for a second day in that Thursday session. S&P futures there unchanged. We will be watching Luxshare Precision in Shanghai later. This is a Chinese tech giant that's a major assembler of iPhones. It's due to report earnings, and Bell's here to take a look. And, you know, Apple's latest devices are selling pretty well. Is that likely to pass through here?
Yeah, it actually could. And I want to just sort of give the context, because Luxshare actually isn't a company we always talk about, but Luxshare and the founder of this business used to work for Foxconn or Honhai. She was actually a factory worker. So it sort of gives you an indication of that sort of translation, because it sort of operates in quite a similar vein. Apple as a company is trying to diversify its assemblers, and so this really benefits the likes of Luxshare as well in this space, and they have been gaining ground. They make iPhones, and they have been doing for a couple of years now, but actually they're sort of in the adjacent product category. So things like Vision Pro, AirPods as well. But overall, you can see in this chart here, they're taking about 75% of their revenue share from Apple. So revenue expected to come in around 67 billion yuan, net income of around 3.7 billion yuan, but certainly margins, that's going to be one of the key focuses here, because when you're in this sort of type of business, it is a really low margin space. And even though they could have improved on the quarter, on the year, they still might be trending down. And again, that tells you they're still making more of their money from these lower price products.
Is that over-reliance on Apple a risk?
Yeah, that's something that Bloomberg Intelligence has certainly highlighted. And when you do, again, as you say, so much revenue coming from Apple, 3/4 of it, it could sort of dent those diversification efforts. I mean, the chairman, as I mentioned, Grace Wang, is clearly aware of this, and she's been quoted in media earlier this year talking about that desire to move away from low value-added processing. Other sectors they're looking at include telcos, automotives. They actually just took a majority stake in a German automotive parts maker, Leoni, last month. It's sort of interesting, again, because it makes me think back to Foxconn and their efforts as well to try and move up and move into higher priced or higher value products. And they've also got their own auto efforts. Is Luxshare looking at something similar?
Annabelle Jewelers there with the latest on Luxshare, and of course its dealings with Apple. In fact, Apple's Tim Cook visiting China this week in his second such trip in a year. His visit comes as the firm faces questions over its latest smartphone supported by OpenAI's ChatGPT, which is barred in China. Bloomberg Opinion columnist Catherine Thorberg says Apple needs to find an AI partner in this country. She joins us now in Tokyo. Catherine, so far it seems that visit is going well.
Good morning, Shery. Yeah, so it seems like Tim Cook is having a great time in China based on his social media dispatches. You know, he's been meeting with students, touring an organic farm, taking a lot of selfies, but we didn't get the sort of news that everybody's sort of curious about. And a lot of the comments on his social media posts are, when does Apple Intelligence come out in China? Have you found an AI partner in China? And I think that's, you know, really what everybody was sort of looking for in this trip. And so far, we don't have any updates on that front.
Why is that so important?
So the biggest selling point of the latest iPhones, the iPhone 16s, is the AI updates. And those are currently barred in China due to regulatory restrictions around sort of ChatGPT and very strict regulation around AI applications. So and at the same time, Chinese consumers have a very high demand for AI tools. Chinese people are among the highest personal users of AI tools in the world. So the demand is very high. Competitors already have their AI tools out on smartphones, but Apple so far hasn't given us any updates about when that's going to launch in the China market.
How have they been so successful in this market over the years? We've seen, of course, many other US giants, try or have been shut out.
So I think that's really a testament to Tim Cook's leadership in China. He's really sort of weathered a lot of storms over the years. And I think that this sort of AI challenge that they're facing now will, especially amid these sort of fresh geopolitical tensions that we're seeing between the U.S. and China, I think that will really be sort of his next big test. And we'll have to see how it all sort of plays out in the long run.
When it comes to the broader geopolitical risks that Apple faces, especially since we're headed towards the U.S. election, what could be the ramifications about its dealings in Beijing?
That's a good question. I think Apple and China have really had a symbiotic relationship for so many years. And, Apple brings so many jobs to China. And at the same time, it gets a big chunk of its revenue from the China market. And so I think a big question for Apple is, will it still be able to tap into that China market going forward? And will it still be able to, tap into those consumers and sort of see sales continue?
Bloomberg Opinion columnist Catherine Thorbeck here with the latest on Apple in China. And these are some of the latest from the corporate front as well. McDonald's supplier is recalling some yellow onion batches produced in Colorado in response to that deadly E. coli outbreak at the burger chain. Taylor Farms, which supplied onions to restaurants impacted by the health investigation, says it hasn't found traces of the bacteria yet, but is pulling the products out of caution. Major food distributors affected by the recall are also contacting their customers. KKR posted a 58% surge in its third quarter profit, beating Wall Street expectations. Shares hit a record in U.S. trading. The alternative asset manager generated record transaction fees in its capital markets business. Assets under management at KKR, which invests in a range of assets, including private equity, credit, and infrastructure, also rose almost 20% from a year earlier. Morgan Stanley says CEO Ted Pick will become chairman of the board in January. He's replacing his predecessor, James Gorman, who said in May that he would step down by the end of the year. Gorman will take on the title of chair emeritus after leaving the board. The longtime former CEO was just this week named as chair of the Disney board that's helping the company find a successor to Bob Iger. We have more ahead on the Asia trade. This is Bloomberg. An increasingly unstable geopolitical landscape has upended the post-Cold War dynamic, with the U.S.-China rivalry helping remake the hubs and pathways of global trade. But as some nations choose sides, there are a few who are taking advantage of the situation. Bloomberg Originals has more on the so-called new neutrals. Here's a preview.
The aftermath of the Cold War meant a boon for multinational business. But pandemic lockdowns and modern conflicts are perhaps ushering in a new era.
Globalization isn't ending, but globalization is changing shape.
In the midst of this, some countries and companies are finding it best to hedge their bets.
There's a much bigger family of economies who have chosen not to take sides in this big geopolitical realignment.
Since the Ukraine invasion, countries that voted yes in the UN to support Ukraine have fallen into a US-led pro-Western bloc, while countries that voted no, abstained, or didn't vote at all fell into the pro-Russian bloc. At least 101 countries have always abstained or fell into neither bloc. These are the new neutrals, countries like India, Malaysia, Nigeria, and Brazil.
Where greenfield FDI goes, jobs typically follow. It's one of the best indicators to gauge sentiment among the world's biggest companies.
Greenfield foreign direct investment measures money going into new operations in foreign countries. Jockeying for foreign investment before 2020 remained fairly even-handed. Then look at what happens with COVID and the invasion of Ukraine. Pro-Western investment jumps, pro-Russia investment falls, and new neutrals soar.
You can watch that full documentary on the terminal and on Bloomberg.com. And, as we continue to watch the climate transition and the challenges, myriad challenges that we've seen materialise, particularly over the past year, it's really been seen this kind of chronic lack of ambition and action from countries the world over. And that means the UN says the world is now on course for warming of up to 3.1%. The United Nations now warning to keep that goal intact below 1.5% will soon be unachievable due to a lack of action. And the current policies will lead to that 3.1 level to the end of the century. Even promised reforms would only limit the increase to 2.6 degrees as well. So all of that, Shery, translating to a need to cut emissions by 42% by the end of the decade, 57% by 2035.
And really to show the lack of action among countries, the UN saying that Madagascar is the only country that's come forward with a strengthened 2030 climate target this year. And of course, the expectation right now is not for much to be done when it comes to curbing emissions at this year's COP29 summit in Azerbaijan, because that's set to focus on how to scale climate finance instead. Take a look at how markets are doing right now as we keep an eye on the Japanese yen at this point as well. Of course, we continue to hear some comments coming from Japanese authorities. Currency chief Atsushi Mimura speaking in Washington, saying that he's watching currencies, including speculative moves in this space, and he's watching the moves with a high sense of urgency. The Japanese yen has risen overnight against the U.S. dollar. We had the dollar under pressure with Treasury yields, but at the same time, we're still headed for the worst month in 2 years when it comes to the Japanese yen. And all of this, of course, as we continue to watch more economic data in the U.S. coming in a little bit stronger than expected. New home sales beating expectations, jobless claims dropping to a 3-week low. So it's that path for the Fed and the BOJ that we'll be watching. Market opens in Tokyo and Seoul next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after we saw some gains in the overnight session on Wall Street. Haidi, we had big tech leading those gains. And of course, we're watching those comments by G20 finance ministers and central bankers expecting a soft landing for the world economy.
This is really gearing up to what feels like the start of that sort of political risk season, right? Because, of course, we are looking ahead just under 2 weeks now to the big vote in the US for the presidential election. But, of course, also before that, a key vote in Japan as well.
And watching the Japan elections, of course, on Sunday, we have been watching the weakness in the Japanese yen around that uncertainty over what might happen. Not to mention that we do have the BOJ policy decision next week as well. We heard from Governor Ueda signaling the potential that there would be no moves next week. No rate hikes was the signal that we got, and the yen right now holding at that 151 level, really close to that 152 against the U.S. dollar. As we continue to watch the Nikkei now open under pressure, 0.4%. We have seen volatility in the Japanese markets, especially with Japanese yen moves. At the moment, the likes of Bank of America, Mizuho Securities also potentially seeing a 160 being touched at some point. And all of this as we also got Tokyo inflation numbers slowing a little bit more than expected. And of course, that could lead to indications of the nationwide price numbers that we get later. But take a look at how Korea is coming online as well, because we saw the Korean won being a little bit supported in the previous session against the U.S. dollar from that 3-month low. We are seeing it hold steady at that 1378 level. The cost becoming online up 0.6% at the moment, Haidi.
Take a look at what we're watching when it comes to Australia, because it has seen a little bit of a rebound after a couple of sessions of corrections. We have seen some of that sort of lower trading when it comes to miners, financials in particular, but we are seeing now steady gains for the ASX, about 0.4% higher. One of the stocks we're watching is WiseTech, and we had the stepping down of the CEO, Richard White, and that really has translated to a relief rally in that stock that has really been pushed down when it comes to the ongoing media reports about alleged inappropriate
appropriate behaviour by Richard White. We saw that gain of as much as 22% at one point after what has been a sustained sell-off for that company. We are seeing a little bit of softness when it comes to the Aussie dollar, 66.36, and of course quite a lot of event risk swirling around the direction of the US dollar as we head towards the presidential election, and also watching to see just how much respite we could potentially see going forward when it comes to the perhaps temporary calm and the cessation, albeit brief, when it comes to the sell-off in US Treasuries as well. Let's bring in Richard Harris, who's the CEO at Port Shelter Investment Management. Richard, great to have you with us. And it does feel like a lot of these risks are coalescing at this point, right? Be it you take a look at the risk of, perhaps the Fed not doing as much as expected, what happens with the outcome of the US election, not to mention geopolitical conflicts as well. But, when it comes to the Fed, you actually, do you think that there is a risk that they may not have to do any more? And is that just for this year or the rest of the cycle?
Yes, I'm looking at this year. I mean, don't forget that not that long ago, people were saying, oh, we're going to get 4 or 5 25 basis points cuts. We had one jumbo cut, and basically that's it. I think the Fed, of course, have been surprised, as we all have, by the fact that the consumer's been so strong. So there's been no real need to cut rates. They've not had a real need to cut rates because, if things are going fine, money needs to have a cost. We can't have zero interest rates forever. But I do think we're looking really to the end of the year, because looking into next year, we're going to have a whole new series of issues regarding the new president. And both of the candidates look as if they could have inflationary policies going out.
How do you sort of play that risk, right, if it comes to that bigger fiscal risk? Do you, particularly portending to what we've seen as a pretty relentless rally across, mega caps and perhaps the start of that rotation as well?
Well, what bailed us out this year was, first of all, we had the AI bubble, and then that moved into the fact that the economies were stronger than we thought. And some of the geopolitical risks are very serious, but haven't come through as much as people have thought. So 2024 has been a great year for narrative. 2025, of course, looks quite different. And it is difficult to see where the next bull situation is going to be. Having said that, I think, we're going to have the election, then we'll probably have a bit of a Santa rally. Then going into next year, I think people will start to look more seriously at what's going to happen. What is out there in the future? Are we going to continue to see the soft landing or no landing scenario? Or maybe as the consumers start to wobble? And I think the big indicator that we're all going to have to look forward to in the new year is really what the unemployment figures look like, because the consumer's been holding up. If people get fired, they're going to start pulling in the horns and not spend so much.
Richard, talking about the elections, we have one also coming up just before the U.S. on Sunday. We have the general elections. And I do wonder what your take is on the impact on the Japanese yen, because I have seen both arguments that if Prime Minister Ishiba doesn't get a clear mandate, that perhaps the yen could weaken because policymaking will be more difficult. But I've also seen that we could see a safe haven trade and the yen could spike. Where are you?
Well, I think what's happening with Japan at the moment, clearly they've got their own issues domestically with the election. But, let's face it, at the end of the day, the LDP are going to get in. They may get in with a bit of a bloody nose, but they'll probably get in. And then it'll be difficult to see how we're going to see a lot of policy changes. But what's really changed in Japan is the last couple of weeks is we now, with the yen, we don't have a yen narrative. We've got a dollar narrative. The dollar's been stronger. It's pushing the yen weaker. And I think that that's probably less serious for a big fall in the yen, because it's really reliant on what's happening there.
What does that mean for the Japanese stock market?
Sorry, I'm getting some interference.
Richard, I was just asking what that means for the Japanese stock market.
I'm sorry, I'm getting the producer interfering.
Right. Richard, we'll try one more time. I was asking what that would mean for Japanese stocks.
I mean, for Japanese stocks, I think that what we saw was a big rally because we had that big fall in the yen. So equally so, if my view is really that we're going to get maybe a bit more weakness, but really related more to the dollar, then I think the Japanese stock market will probably tread water and really focus on what's happening elsewhere in the world.
Richard, hopefully you can hear me clearly now as well. But China, you think this is the real deal?
Yes, I think this is really quite a pivot. What I think people are forgetting is the Chinese authorities have been trying to support the economy now for over a year. We've probably seen maybe $2+ trillion be put into the market in terms of stimulus. That's quite a lot in a $19 trillion economy. What has happened, of course, is it's gone in drip by drip, and each piece of stimulus has been swallowed up. Rather than having the big bazooka. But I think the authorities are on a path now that they cannot get out of. They really do have to keep moving on this. And it's very much the Draghi syndrome. You know, they're going to do what it takes.
Richard Harris, good to have you with us, CEO at Port Shelter Investment Management. And this, of course, as we keep an eye on some big moves in the markets right now, we start you off with SK Hynix at the moment gaining ground for a third consecutive session. This, of course, as we're hearing local reports in South Korea that SK Hynix is in talks with Tesla to supply as much as 1 trillion won of enterprise solid-state drives. These are enterprise SSDs or eSSDs, which are data storage devices for AI servers. And this coming from local media that SK Hynix is in talks to supply Tesla. Of course, we already had their results as well, SK Hynix this week, showing record profits and revenue. Take a look at how Rigaku is also trading at the moment. They have their trading debut today. And they actually popped at the open, but right now we're seeing a little bit of downside. And the offering was priced at the top of the market, a range of around 1260. We're down from those levels, and this is a Carlyle Group-backed X-ray device manufacturer, and this IPO was the second largest in Japan this year, Haidi.
Take a look at, Shery, what we're watching when it comes to one of the movers here in Australia. Qantas stock trading a little bit to the upside, about 0.6% there. We did see the CEO speaking earlier announcing an additional $1,000 Aussie payment to non-executive staff. They're also planning to hire 2,000 more staff this year. This comes as we've seen quite a troubled period for, of course, a flag carrier here. They're facing a multi-million-dollar payout to almost 1,700 ground workers that were deemed to be illegally fired during the pandemic. That was after a court put that combined compensation for test workers at about 170,000 Australian dollars. We also saw an update when it comes to the fuel cost forecast for the first half this morning as well. That's been a little bit lower, and we are seeing Qantas trading to the upside this morning. More ahead on the Asia trade. This is Bloomberg.
G20 finance ministers and central bankers see a soft landing for the global economy, but are also warning of mounting risks. The group cited war concerns, economic fragmentation, commodity price spikes, and persistent inflation. The bloc cautioned against rising trade barriers and says it's committed to a transparent multilateral trading system. When it comes to the United States, IMF First Deputy Managing Director Gita Gopinath says the strength of the American economy remains strong. Speaking with Bloomberg, she also says the results of the U.S. election will have a global impact.
It is very important. What happens in the U.S. matters for the U.S. and matters for the whole world. So as you can imagine, it is an important part of the conversation.
Is it making people feel paralyzed? And I'm talking about policymakers, and I'm talking about, investors. Is it making people feel like they can't really make any moves until there are some outcomes for some of the big events and the elections that are coming down the pike?
When you see the data, you don't really get that impression that people are paralyzed. If you look at the U.S. economy and how it's doing, consumption is doing very well. Labor markets are doing well, even though they've slowed some. And the financial markets are very strong, financial conditions are easy, so you aren't seeing any negative knocks coming from that uncertainty right now. But yes, I think as we get closer to it, that goes up, and we'll see what comes after that.
Yeah, and I was speaking with the Buddhist Bank president this morning, and he was talking about how it's hard for him to really gauge some of the inflation risks, because for them, inflation would be a lot higher. Do you feel like that's the case, that interest rates are going to have to go up more significantly as more tariffs go into place?
What we do know is that tariffs are inflationary. They do put pressure on prices. That's usually what we see in the data, looking at past episodes of tariffs that have been put in place, right? In addition, there is a very important question of what the stance of fiscal policy is going to be around the world and how expansionary it's going to be. The U.S. economy is very strong right now. At the same time, we are seeing inflation coming down, and our expectation is that it will continue to do so, and the Fed will continue to cut rates. Now, if there is a much more expansionary fiscal stance, that could move the argument in a different direction.
Are you surprised that interest rates, I don't want to say interest rates, that 10-year Treasury yields, that the benchmark Treasury yields on the longer term, or even just globally, aren't reflecting more the $100 trillion of global debt that you've reflected in your latest IMF projection?
The rate is going for the U.S. debt is going to also be a function of the strength of the U.S. economy, the strength of its institutions, and there's tremendous faith in that. Again, the U.S. economy is one of the strongest among the major economies, if you look at those. And when we compare the U.S. to the other G20 economies, it's the only economy whose GDP is higher now than we had projected before the pandemic. The only major economy. So it's a very strong economy, a lot of confidence in it, and that's showing up in the yield numbers too.
The IMF First Deputy Managing Director Gita Gopinath there speaking to Bloomberg's Lisa Abramovich. Well, the IMF this week also called the decline in inflation without a global recession a major achievement. But Bloomberg Opinion columnist Daniel Moss thinks central banks remain averse to declaring victory. He joins us now. So Daniel is saying you wish policymakers would be more effusive about acknowledging the sort of victory of policymakers, right? We do have a lot cutting rates. Some, like where I am, are a little bit behind. So is there a problem with being more cautious?
Well, Heidi, unlike where you are, the IMF has not said, we're not ruling anything in, we're not ruling anything out. This is a full-throated acknowledgement that the back of the inflationary challenge of the past couple of years has been broken. Now, what's significant about this is all of the attention from the IMF's latest round of forecasting has gone into the cut in global growth forecasts of 0.1 percentage point. It's basically not a cut at all. Okay. The real news is the IMF's commentary on inflation. By late next year, they see the global average of headline inflation as being slightly below the average of the 20 years preceding COVID. This was the era of the Great Moderation. This was the era when Janet Yellen said, it's a mystery why inflation is so low. Jay Powell, early in his tenure as chair, described it as one of the great economic challenges of the time. And yet, among the central bankers, they struggle to acknowledge this. One of the all-time classic contortions came from Thailand, where after a long-awaited cut and with inflation well below the target, the central bank governor was loath to even call it a reduction. He preferred recalibration. So they won't say it, but the IMF has said it for them.
So what's the hesitation from central banks then? Why not embrace the fact that potentially inflation could have been beaten?
Look, I think part of it, Shery, is a hangover from the transitory era. The central banks were perceived as being tardy to recognise the threat of building inflation in late 2021, building into 2022. They don't want to be caught saying, yeah, we think we've got this done, we think we've got this licked, only to see things go the other way. So being reluctant to declare victory also serves a little bit of a defensive public relations purpose.
Bloomberg Opinion columnist Daniel Moss there with the latest on the inflation trajectory and where central banks see that going. An increasingly unstable geopolitical landscape also has upended that post-Cold War dynamic when it comes to geopolitics, with the U.S.-China rivalry helping remake the pathways of global trade. But as some nations choose sides, there are a few who are taking advantage of the situation. Bloomberg Originals has more on the so-called new neutrals. Here's a preview.
The aftermath of the Cold War meant a boon for multinational business. But pandemic lockdowns and modern conflicts are perhaps ushering in a new era.
Globalization isn't ending, but globalization is changing shape.
In the midst of this, some countries and companies are finding it best to hedge their bets.
There's a much bigger family of economies who have chosen not to take sides in this big geopolitical realignment.
Since the Ukraine invasion, countries that voted yes in the UN to support Ukraine have fallen into a US-led pro-Western bloc, while countries that voted no, abstained, or didn't vote at all fell into the pro-Russian bloc. At least 101 countries have always abstained or fell into neither bloc. These are the new neutrals. Countries like India, Malaysia, Nigeria, and Brazil.
Where greenfield FDI goes, jobs typically follow. It's one of the best indicators to gauge sentiment among the world's biggest companies.
Greenfield foreign direct investment measures money going into new operations in foreign countries. Jockeying for foreign investment before 2020 remained fairly even-handed. Then look at what happens with COVID and the invasion of Ukraine. Pro-Western investment jumps, pro-Russia investment falls, and new neutrals soar.
You can watch that full documentary on the terminal and on Bloomberg.com. Well, China is said to be pressuring its automakers to pause expansion in the EU due to the escalating trade conflict over EVs. Our EV supply chain and transport reporter Danny Lee joins us now. And Danny, how much of this is about this ongoing tariff tussle, and how much of it is just sort of ongoing concerns about the level of demand for these producers?
I think if there wasn't an issue over tariffs between Brussels and Beijing, we probably wouldn't be seeing these kind of directives from Beijing to halt expansion. And so clearly what Beijing is asking now is to halt expansion and to stop looking for new manufacturing sites if you're a car company, or even stop making new commitments. So it doesn't appear to at least affect existing commitments that have been made, but clearly the pressure is on. The tensions, the fallout over these, Brussels trying to halt, or slow down Chinese imports of EVs. And so, we saw the vote from Brussels only a couple of weeks ago of up to additional 45% of tariffs. We've seen these ongoing talks to try and avert these tariffs, which will come in around a week from so. They collapsed. And so there has been real unhappiness from Beijing. And so, its view is, why should Europe get multi-billion-dollar investments?
Danny, so where are the negotiations right now between Beijing and Brussels? And really, as we continue to see geopolitics and just tensions with the U.S. as well, where does Beijing stand when we're headed towards, of course, the U.S. election and potentially even more tariffs coming its way?
Well, first on the talks, Brussels and Beijing are still at loggerheads, frankly. And Beijing has, in the recent weeks, accused Brussels of trying to divide and conquer some of the Chinese automakers, trying to see if there can be individual car makers who would separate from the existing negotiations to remove or change the tariffs completely, to see if there'll be individual car makers who would win. Beijing has been very unhappy with that. So it doesn't seem like we'll get any breakthrough anytime soon, but you never know. With the clock running down, we could actually see cooler heads prevail. But clearly, Beijing is looking forward to the US election, which is only weeks away, because the risk of tariffs from the United States, should there be another Donald Trump presidency, that really does focus minds. And And given what we've already seen from President Biden and the administration on tariffs, trying to stop these Chinese EV makers, you could see that replicated in a much bigger form across a wider set of industries.
Bloomberg EV supply chain and transport reporter Danny Lee. Other stories that we're following this hour. The Biden administration has issued its first approval for a lithium mine, ramping up efforts to shift the US critical mineral supply chain away from China. Australian mining company Ioneer expects to start construction at its project in Nevada in 2025 and is targeting first production in 2028. China has long dominated global output of commodities crucial to electric vehicles. TSMC says it's achieved early production yields at its first plant in Arizona that surpassed similar factories in Taiwan. The company says the share of usable chips manufactured at its facility in Phoenix is about 4 percentage points higher than comparable facilities in Taiwan. The accomplishment is a sign of progress for Washington's efforts to revitalize American chip manufacturing. Much more to come on the Asia trade. This is Bloomberg.
Welcome back. These are some of the geopolitical stories that we're following. Bloomberg has learned Russia is proposing a unified depository and clearance system for BRICS countries in a bid to sidestep the West. A source says Russia presented the so-called BRICS Clear umbrella at the Kazan summit as a way to ensure cross-border transactions bypassing Euroclear and Clearstream. Russia has a clear interest developing such alternatives to get around U.S. and G7 sanctions since its invasion of Ukraine. President Vladimir Putin says military relations with Pyongyang are what he called our business, as he avoided answering whether North Korean troops are in Russia. Speaking at a news conference at the end of the BRICS summit, Putin pointed to the strategic partnership signed with North Korea in June when asked about troop movements. The accord states both countries will provide military and other assistance if either is attacked. We have more ahead on the Asia trade. This is Bloomberg. Take a look on how Japanese assets are trading at the moment. We are seeing some pressure on the Nikkei, down 0.9% as the Japanese yen is holding steady at that 151 level. We had a little bit of strength overnight against the U.S. dollar. This, of course, as we've already seen significant weakness in the Japanese yen. We're still talking about potentially the yen's worst month in about 2 years. Governor Ueda has signaled no rate hikes coming next week. And all of this, of course, ahead of the elections happening on Sunday, and that political uncertainty about what happens to the lower house elections also weighing on the Japanese yen. Our next guest says Japanese Prime Minister Shigeru Ishiba was supposed to change the LDP's image, but people are disappointed that he doesn't have the clout to change the party's culture. Joining us now is Mieko Nakabayashi, professor at Waseda University. She previously served as a member of Japan's House of Representatives. It's great to have you with us. So tell us a little bit about how you feel about Prime Minister Ishiba's leadership in the past month. We have seen him backtrack a little bit from some of his political election pledges.
Exactly. Maybe that is the reason that his support rate is dropping toward the end of his campaign for the LDP. And people are a little bit disappointed because the reason that his predecessor, Mr. Kishida, stepped down unexpectedly, actually internationally, that because he suffered from such a huge scandals of campaign financing and related to certain factions. Also, the scandal of the unification charge. And Kishida administration couldn't deal with it, couldn't establish higher transparency. And people expected Mr. Ishiba would do something better. And his support rate went up much better than Mr. Kishida's. However, throughout the campaign, he slightly changed his statement and commitment and became softer to those members or candidates who had all sorts of scandals.
So what does this mean for the Prime Minister then? Would you expect it to go as far as him not being able to form a government and a coalition and not surviving this vote?
Well, we haven't seen the results of the election. Therefore, we cannot say anything particular. However, there are lots of signs that he may lose many seats. If he can rely on Komeito, the allied party, then maybe he can hold the power and form his administration again. However, he and Komeito combined lose a huge number of seats. And if they lose power, well, they have to think about a new coalition, maybe. And there are some rumors that one of the opposition parties may help them out, but we don't know about it.
You say Ishiba was the hope. If he doesn't have the ability or the clout or the personality to be able to make these cultural changes, then is that hope for change within the party dashed?
Yes, I think entire party is hurt. And actually, the LDP is split, fragmented so much, particularly with the right-wing members. And Ishiba was always criticizing those people, but now he has to govern the party. However, those who are opposing Ishiba never gave in. That was the problem. And Ishiba must take them inside his side. Otherwise, he cannot govern the LDP. But so far, those people who really do not like Ishiba are not cooperating. And if you look at the campaigns, those campaigns are run almost separately. Ishiba is not invited to help those members who are tainted with the scandals. And for example, Takaichi, the rival of Ishiba, is very popular to be a speaker for those, or a stump speaker for those scandaled members. Therefore, the LDP is divided so much, and there is an internal war going on, even during this important general election, to make the LDP win as a whole. However, it is really fragmented. Therefore, after the election, we don't know how they can come back together and help each other.
If we're worried, or if you're worried, and clearly voters may be concerned about Ishiba's capability and the confidence in him domestically, does that also extend to potentially being concerned that he may struggle to manage the relationship with the United States, depending on what happens in the US presidential election?
That is a huge concern to us, too. It depends on who is elected for the U.S. President. And if, for example, Mr. Trump is elected, well, we wonder if Mr. Ishiba is a character to get along with Mr. Trump. Well, I guess Mr. Ishiba does not play golf very well. He is not good at flattering any even foreign leaders or Mr. Trump, for example. Therefore, he may not be able to do well. However, there is a hearsay in Japan that maybe Mr. Aso, who already met with Mr. Trump, may come in and help him out. However, Mr. Aso and Ishiba are not getting along very well. That is another concern that people are having. at the same time, I talked with lots of civil servants who are trying to save Japan, save the LDP, eventually save any kind of administration, which is currently maybe Ishiba holds, and it will hold after the election. And they were trying to somehow re-educate Mr. Ishiba and make him more somehow good leader to cooperate with all those people who actually he criticized previously. And then maybe he can become a better leader.
Mieko, we have seen the Washington-Tokyo alliance being pretty strong in recent years, despite the fact that we have seen a lot of course, really struggles in the past. And you are a lawmaker yourself, right? And you were in the House of Representatives during a time when then ruling Democratic Party of Japan was in power, during the brief period of time when we actually had the opposition in power.
Right.
Prime Minister Ishiba and the LDP have tried to make it look like the opposition is not ready for government, really reminding voters of the instability during those years. And I mentioned the U.S. alliance with Japan because at that time, of course, there were a lot of controversies around like American bases in Okinawa, for example. How would you respond to that?
Well, I really didn't like the way that former Democratic Party of Japan governed. Therefore, the party was split. And now there are mainly two parties actually split from then DPJ. And that party is gone. It does not exist anymore. That was a huge reason. And there are so many different policies and people. Interestingly, if you look at for example, Constitutional Democratic Party, currently the biggest opposition party, that is also split if you look at inside. The current leader, Noda, is the sort of right to the middle person. And there are lots of people who are much more progressive within the party. But if you look at the LDP, they are split too. Interestingly, there is a moderate people and then far-right people. And once the far-right people take over, then the party gets really unstable. That happened to the former DPJ. And after they were split, then the current biggest opposition party, the Constitutional Democratic Party, suffered at the last election because they leaned toward Communist Party too much to the left, too progressive. So we are saying that whatever the party is, if you lean to the left or to the right, then the party would fail. And the DPJ learned from it. Therefore, they elected Mr. Noda, who is much more moderate to the opposition party's leader. But still, other parties are there and they're split.
Yeah, we'll see how the elections on Sunday turn out. But Mieko Nakabayashi, thank you so much for previewing what's to come. Professor at Waseda University. Of course, we do have the general elections coming up on Sunday, and you can actually get more commentary and analysis on that event on TLIV Go from Bloomberg's expert editors as well. Take a look at how the Japanese yen is trading against major peers. Not a lot of movement at the moment after we had some strength overnight against the U.S. dollar, but we're sort of holding steady, and we could still be headed for the worst month in a couple of years for the yen. We heard from the currency chief talking about how they're watching the currency moves with a high sense of urgency. For more on currency moves, let's bring in FX and rate strategist David Finnery. High sense of urgency. I mean, what else can authorities say? Could we actually see them intervene, I guess?
I don't think at these levels. I think They need to go a bit higher for that to happen. Obviously, historically, these levels has seen intervention, but given that dollar yen was back to 160 not even that long ago, I think it would need to go a bit higher. And again, the other thing is the pace of any depreciation, I think, also has to be factored in. If it's a grind lower, then that's one thing. If it sort of tumbles lower, then that's definitely another thing that'll be considered. So, but at these levels, I don't expect any intervention around these levels.
It also depends on what we see with the dollar as well, and also how we're viewing the yen at the moment, right? Is it more of the likelihood of haven demand or more of the pressure coming from the US dollar?
Yeah, no, it's a good question. I think obviously at the moment, the main driver really is the dollar side of the equation. You've seen US yields jump higher since basically US payrolls earlier this month, and obviously that's been very dollar supportive. And I think going forward now, the market's really questioning, well, okay, how much further can the dollar go? Not that it can't go higher, but the market's really split because there's obviously these event risks coming up. Obviously you have the LDP election from the Japan side, but from US dollar side, you have US payrolls coming out next Friday. You know, remember that will be distorted by the hurricanes. So the question is, even if it comes in higher or lower, you go, well, how much is that distorted? How will the market react to that? Obviously, you've got the US election. There's a good chance that we may not even know who's won it the day after, because with the 7 swing states, they're all very close. So this could easily be dragged out for quite a bit till we get a definitive answer. And then, of course, you've got the Fed decision of what does the Fed do as well. And if you look at the market price at the moment, it's going, we think they price in 42 basis points of rate cuts this year. So basically a quarter and then basically 50, just over 50-50 on the next one. If you look at the dot plot, it was pretty much evenly split between 1 or 2 rate cuts. So the question is, well, do we do 2 rate cuts, 2 quarter points, or do we do just 1? And the market's not sure how that will play out. If the Fed decides to say, look, hey, we'll do 1, say in December, then obviously some of the market pricing dovish expectations has to be unwound. Obviously, that's dollar supportive. Vice versa, if the Fed says, look, no, we'll do quarter, then that's not fully priced in. So that will put pressure on US yields and send a dollar lower. So you've got a huge amount of risk events in the next 2 weeks, and no one, to be honest, really certain on how they're going to play out.
Our FX and rates strategist, David Finnerty, there's certainly a lot on the risk horizon at the moment, and that's also playing through when it comes to broader commodities. Take a look at what we're watching when it comes to oil, and this as the market continues to contend with the geopolitical risk in the Middle East. But really at the moment, it really is that sort of more bearish outlook going into 2025, potentially more weakness out of China and oversupply with some of the inventory numbers in the US weighing. Brent, though, steadying. We're seeing upside of about 0.5%. This follows a 2-day fall for oil markets there as we continue to watch Israel's potential retaliatory strike on Iran and expectations that leaders will come together for more talks on that Gaza ceasefire as well. We're seeing iron ore as well as copper edging a little bit higher. Vale's third quarter earnings beating estimates. More ahead on the Asia trade. This is Bloomberg.
Take a look at how markets are trading early in the Asian session right now. We're seeing the Kospi and the ASX 200 gaining ground, but the Nikkei is being led lower by materials and financials. In fact, every sector on the Japanese benchmark is right now losing ground, and the top VIX is also down 0.7%. The Japanese yen continues to weaken against the US dollar. We're at 152 right now. And take a look at some of the big movers in today's session as well, because we are reacting to some earnings results. Fujitsu General, for example, cutting its operating income guidance for the full year. They missed the average analyst estimate when it came to the guidance. A little bit of a similar picture for Canon, which has also cut their operating income guidance for the full year. We're watching KB Financial gaining ground at the moment, up more than 7% in South Korea, really jumping after third quarter earnings. They also announced a value up plan. They plan to buy back shares. They're canceling 100 billion won of shares. Heidi.
Let's get you the latest when it comes to the corporate front, Shery. And KKR posted a 58% surge in its third quarter profit, beating Wall Street expectations. Shares hit a record in US trading. The alternative asset manager generated record transaction fees in its capital markets business. Assets under management at KKR, which invests in a range of assets, including private equity, credit and infrastructure, also rose almost 20% from a year earlier. Morgan Stanley says CEO Ted Pick will become chairman of the board in January. He's replacing his predecessor, James Gorman, who said in May that he would step down by the end of the year. Gorman will take on the title of Chair Emeritus after leaving the board. The longtime former CEO was just this week named as chair of the Disney board that's helping the company find a successor to Bob Iger. Well, UBS CEO Sergio Motti warns that the fragmented regulation on European banks is leading to higher borrowing costs and lower shareholder returns. He tells us why he thinks the region's economy may ultimately end up paying the price for not allowing the free movement of capital between European countries.
At the end of the day, the cost is paid by the economy, by clients. I think, of course, shareholders are suffering, but eventually cost of borrowing and the facility and the easiness of accessing credit is impaired. So allowing capital to freely move across jurisdictions creates less cost for the economy.
Is there a warning from the Credit Suisse saga? You've benefited from it on the other side. Your assets have increased. You delivered earnings that outperformed expectations. There is a sense that banks that seem okay are suddenly not okay in a very fast money world. Do you worry that that's the case elsewhere?
No, I don't worry, because if you look at the Credit Suisse situation, was a very idiosyncratic topic that developed over the years. The business model was not sustainable. They didn't really have a great governance, and they benefited for too long from a regulatory concession that should not have been granted, or at least not for so long. And that was a quite unique situation. If you look at what happened back in March 2023, banks, large banks, were actually safe haven, were part of the solution, in a sense, in the US, but also with UBS in Europe. So big banks were solid, and it showed that well-designed regulators can avoid the repeat of the financial crisis. But if you go too far, then you create costs, not only for shareholders, again, also for clients. When is going to cost more to borrow, is going to slow down investments, and so that's not the ideal situation.
There's a saying, and it's not mine, so you can't blame me or credit me, but that the United States innovates and that Europe regulates, and that seems to be the way and the path of travel, and it's the reason why a lot of people expect the U.S. to grow really significantly and less so in Europe. How much do you see that bifurcation continue with investor flows?
Don't worry, I'm not going to disagree on that. So,
okay.
It's quite clear. You saw it in the last 20 years. Numbers talks clearly, and the underlying trend seems to go still in the same direction. There is a desire in Europe to change path. You saw with the Draghi report, with a lot of very comprehensive report analyzing the state of Europe, with a lot of ideas that, unfortunately, are going to be quite difficult to implement. The reason is that you need 27 countries with quite different interests to agree on a common goal that may result in some of them losing short term for the benefits of the long-term benefit. And in this environment, it's very difficult to get voters to support any sacrifice. And so it's likely that you're going to continue to see the U.S. outperforming Europe.
UBS CEO Sergio Motti speaking with Bloomberg's Lisa Abramowitz. And we continue to follow some big trading debuts here in Japan this week. Rigaku debuted today, and it's under pressure right now, despite the fact that we actually saw big appetite being priced at the top of the marketed range. This is the Carlyle-backed X-ray device manufacturer opening at around that 1205 level and continuing to fall. Also, we're seeing Tokyo Metro, the biggest IPO since 2018, now dipping below its opening price on Wednesday, which was at around 1630. We're now below that. This is Bloomberg. Heidi, of course, we continue to follow all of the conversations happening in Washington, D.C. right now with the IMF World Bank meetings, and we've had G20 finance ministers and central bankers also talking about a potential soft landing for the world economy. But when it comes to the U.S. election, that's really the biggest source of uncertainty right now for leaders gathered in D.C. right now, whether it's really casual conversations behind closed doors, steakhouse dinners, seminars and panels. It seems that the outcome of this election is really looming large in leaders' minds.
And a big part of that risk when it comes to certainly this part of the world in Asia, it's China, isn't it? It's how the next administration, particularly if it is a return of Donald Trump in the White House, how they deal with Beijing, if we see that sort of resurgence of the trade war, resurgence of tariff threats, and perhaps just more volatility and less conversation. We know that as we head into this key date, China's engaging in what could be seen as a charm offensive with US allies and partners, including where you are in Japan, including India, the UK and Australia, all ahead of that key vote. And it's really being seen as an effort to kind of create a buffer against the potential turbulence and tension that could rise again post the election. That is it for the Asia trade. This is Bloomberg.